An audio morning brief for the U.S. grain markets. I'm Rich Paz for Critical Point. Wednesday, December 18, 9:40 a.m. Eastern Time. Ran into some issues for all our markets as some of the data we're pulling in, the people providing the data seem to be rather slow and late. Normally, we'd just move on, but we waited and kind of delayed things this morning. Just wanted a better picture. At any rate, what we have here in the corn market for the March corn futures, it's trading an inside day right today relative to yesterday, and the model is saying it can go either way for the level 4 interweek, intraday swings. We just don't know for sure. So if it takes out yesterday's low at 441 and a quarter, that could be a bearish sign into tomorrow. If it takes out yesterday's high at 446 and 3/4, that is evidence the level 3 trend, the bigger move for the month, is up, and it should be up. And the model is saying it should be up to about 448 and may even go up to about 456 March. That's way too high, in my opinion. Doesn't make sense. Some of this stuff we're using is overreacting a little bit. But it is feasible to have a move towards 448 for the corn. However, if it takes out yesterday's low, then that's going to make the trade nervous. It's going back to the December 13th low at 440. If it takes that out, we got problems with our level 3 bullish stance. We're probably wrong, and it's probably only going to pick its head up along the way for a level 3 top as it actually moves lower over the next 1.5 weeks or so into the next level 3 bottom. So we do not want to see it trade below 440. It means the level 3 trend is not working, okay? So now here's hopeful we're actually going to see the market during the day session here trade above the overnight high of 444 and 3/4. That'd be a little encouraging that we have an opportunity to turn higher. The model is basically saying it ought to go higher into next week. But this isn't much of a start, and it's also holiday time. We can get into some weird stuff, sluggishness here. The model's saying it doesn't have to be all that good of a rally into that next level 3 top. And I'll explain more in the weekly update tomorrow when we look at some of the larger trends. It is possible things have to stall out. However, looking out into next summer, however, I still am bullish. All 3 grains, corn, wheat, soybeans, markets ought to move up here, even though the soybeans right at the moment are acting quite bearish. So let's go to the March Chicago wheat. Now, yesterday, Karen Braun was making comments that a lot of other people are making comments that the U.S. market seems to be way behind what's going on in Europe. European markets are moving up. They're not exploding. They're not robust bulls, but they're bullish. And it's primarily because of Russia and winter wheat. And even Russia said, yeah, prices probably ought to work higher, even though they don't want to spook people and because they don't want to raise their own food prices during their war. Okay, so they got a problem with that. But they wouldn't mind a better import or export price and take care of business, because they do have a rather serious issue over there. But you know how wheat is. It can be serious, then later it's fine. It's a weed. You can't kill it, is what some people say, okay? Any rate, I like what I see with wheat. I'm calling a level 3 bottom. I think it's moving higher into next week. I don't know how well it'll move higher if corn isn't going to do all that well now, but it can do its own thing as well. And then tomorrow we'll discuss on the larger trends. I think there's a possibility of a major bottom in wheat. Problem is something's going to be nagging me for some time. It's possible it's in a downtrend into January as well. Okay, so the way I look at it, it's worth taking a little gamble for short-term to very short-term traders, fast traders, to see what you can get out of wheat here. It may be the U.S. wheat market's going to try to now get in line with what's going on with European wheat prices, okay? Now, let's move on to the January soybeans. This one looks ugly. And let's see, I was just looking at the weekly chart. Let's go to the daily here. We're due for a level 3 bottom any day now into next week. We're giving an update this week. I say you got a level 3 bottom in. I won't give you an alert. Just go for it, okay? Now, next week it ought to be higher, but I'm concerned it's running out of time. It's going to be limited amount of upside, and it's just going to fizzle out on us and actually be right back down again. I'm concerned soybeans want to go lower into January, that they just feel like there's just too many beans that are going to come out of Brazil, and they're still dialing in and adjusting for a good crop there that can buy. What I'm saying is I think you could put the lowest price in even before the main thrust of Brazil harvest, and then actually have some stability there as the farmer fights to get a little better price, and we find the demand is actually still pretty good. We do have to watch out for China because there's some evidence their economy could be slipping even more now, and things might break down. I'm not convinced that's a negative on soybeans necessarily because they still have to eat, okay? But you can see there's factors here that we might as well assume soybeans are going sideways to lower into January, and then we'll reevaluate. But I do think by summer we will see those soybean prices up. I think corn and wheat can hold up better than soybeans, bottom out sooner, and also are heading higher into summer, okay? So big news is it's like the U.S. market is dragging its feet. People were looking at spreads and ratios of U.S. wheat to European wheat, and they're saying the U.S. is a little too far behind. It ought to pick up its pace. Past results are not necessarily indicative of future results. Have a great day. Thanks.